Hey there, guys. It's that time of the week again. Welcome to Crypto Coin Guru's weekly podcast where we discuss the news and the events that happen that affect your trading. So, without any further ado, let's get started with this week in crypto. What we have going on today, or actually this week, CoinCheck gets hacked. So, CoinCheck is a big Japanese based exchange based out of Tokyo that had NEM, which was the cryptocurrency, hacked. Now, this is huge because we're talking about 500 million US dollars worth of NEM that was hacked, right? That's insane. So what we're going to do is we're going to keep an eye on this because this is something that just developed yesterday, and more news is coming through about this as we speak. But all I can say about this is, guys, remember, this is one example of why it is a bad idea to keep your money, your crypto, on exchanges, especially centralized exchanges. So if you guys have a large sum of money on exchanges, please transfer it out. Put it on a wallet. Get a ledger, get a Trezor, get a hard wallet. Put it on there. Keep your money safe because hacks happen. Exchanges have been known to be hacked. So that's my little bit for that. Just protect yourselves, okay? Uh, just keep that in mind. Never leave your money on exchanges. You can leave a little bit to trade if you want to, just so you can get those quick trades going. But for the most part, the majority of your money should be in a wallet, guys. And the best wallet out there is going to be a hardware wallet where it's not like a desktop wallet, but rather something that is a piece of hardware. I use the Ledger Nano S. I love it. I have friends that use Trezor. They love that. So take a look at it. Do some research. Go into that if you want. We'll be willing to do some research for you and present it, but get one of them. All right, moving on. Government officials must declare their crypto investments in South Korea and Russia. So, there was a bill for the regulation of cryptocurrencies in Russia that was submitted by the finance minister and the central bank, which requires state Duma deputies to declare their crypto investments. Currently, at this moment, government officials are not required to declare their crypto holdings. Now, according to a recent announcement by the Russian Ministry of Labor, that's going to change, right? The chairman of the State Duma Committee on Financial Markets explained that Russian officials will be required to declare their cryptocurrency holdings under the bill that they just recently submitted by the central bank and the Ministry of Finance. Interestingly, as that's going on in Russia, something similar is going on in South Korea. So Chung Dong-young, a member of the South Korean National Assembly's Administrative and Securities Committee, also has introduced a bill to add cryptocurrency holdings such as Bitcoin, Ether, Ripple to the list of public disclosure items. He explained that, quote, the current public service ethics law excludes cryptocurrency, which has recently emerged as a means of property proliferation, end quote. So the bill amends Public Service Ethics Act to require public officials to declare their crypto. Now, there is a limit of holdings which you have to then start declaring, and that is going to be 10 million wons. So that's about an approximation of about 9,300 US dollars. So anyone that holds that much or more has to report that, is what this bill is saying. On top of all of this, South Korean Prime Minister has also ordered a new code of conduct to be prepped and implemented to address the actions that the government employs regarding crypto regulations are taking or have taken, especially following this recent case of possible insider trading that was or is still being investigated. And on other news, crypto exchanges have been overrun for months, especially as the demand has caused a bottleneck. Now, a number of platforms have been forced to temporarily shut their books or do what Bitstamp has done or announced, is to have a plan to recruit 100 new staffers to their call centers. For what? Basically to accommodate the new influx that keeps on coming. Now, despite the crash that we saw in December and early January, the price drop has been very, very, how do I put it, appealing. And so the demand for admission to crypto exchanges just keeps on growing. And a lot of these exchanges are finding it difficult to accommodate more than 1 million users each day. Imagine, just think about what that is. 1 million users each day that sign up. Um, and at the same time, they have to pertain and keep things pertinent to the existing customer base as well. So these influxes really forces the exchanges to innovate themselves and change for the better. Something I don't think that would have been done or that they would have been forced to do any quicker. I think I just made that word up, quicklier. So any quicker if the demand wasn't so high. So I'm going to call this a critical stress test that's being placed on these exchanges at the moment. And I think it's better that this happens now than later when we have a bigger population investing in the crypto markets and things start to bottleneck even further, right? And we know that a lot of the bottlenecking has something to do with crypto kitties. But really, after reading this news article, I'm a little flabbergasted. Crypto celebrities? Okay, I'll bite. What the hell is crypto celebrities? So it seems that anything can be placed on the blockchain with a little bit of ingenuity. Crypto celebs, or crypto celebrities, is a smart contract-based trading game which profits from digital scarcity. So what it seems is that only one copy of each celebrity is released, which compels traders to spend thousands and thousands of dollars to pick up the celeb, like Satoshi Nakamoto or Emma Watson or any of the other celebrities out there. Guys, I'm sorry. I can't believe I'm actually talking about this. Apparently, crypto celebrities rewards early adopters who get to snap up or snag up the best digital real estate and then sell it for a profit. Blockchain-based collectors games like these create a level of FOMO. That's all it is. We create a level of FOMO that causes assets to change hands for thousands of dollars. There's really nothing much more to say about this. I just don't believe that this is the best use of blockchain, but whatever. At least it's being used. So let's move on. So this next article I really like. And what I like about it is travelers will be able to spend Satoshis in stores and cafes at the Brisbane airport. Now, major retailers will be accepting several crypto, including Bitcoin. So what coins will travelers be able to spend? Right now, it looks like Bitcoin, Ethereum, Dash, and a few more of the local crypto payment system cryptos that the payment system provider is working on with the retailers in mind. So what is actually happening? Brisbane Airport is going to be the first international airport in the world to launch this initiative. Now, let's hope that more airports follow their footsteps so most of us can spend some Litecoin or Ether when we want to pick up a cup of coffee at a Starbucks before our flight. I mean, honestly, I think this is great. The operator of Brisbane Airport also highlighted some benefits of cryptocurrency payments, and what they said was they keep the user's personal identity private and eliminate third-party interference. And what that does is it allows for very low transaction fees, exchange rates, and transfer times. With this, I have to mention that last summer, the Japanese low-cost carrier Peach Aviation unveiled plans to offer various Bitcoin services to its customers. Now, it promised to install Bitcoin ATMs and offer crypto payments in its duty-free shop at Kansai International Airport. I don't know how that went through, but a number of the travel companies also accepted Bitcoin for booking flights, hotel reservations, and renting car services. But, good on you, Queensland. Well done, Australia. Forging ahead. Let's hope that this is a grand success and, things like this come more to as many airports as possible. Because I'm waiting for the day when I can just tap my phone, send some Ether, send some Litecoin, grab that coffee. So, more in the news. It's been found out that there's an inverse relation between Bitcoin and gold. As cryptocurrencies have grown more popular over the past year, researchers have noticed an inverse relationship between gold and Bitcoin. In the past year, crypto spiked while gold markets ended up slumping or diving, and when gold prices jumped, digital assets dropped, right? Analysts have seen the inverse relationship more clearly over the past 2 weeks, especially when the Bitcoin market had its most significant drop in values since January of 2017. Additionally, the research analyst Scott McDonald from Seeking Alpha pointed out that there's been an inverse relationship between Bitcoin and gold for quite some time, but even more so since the creation of Bitcoin future markets. Now, as McDonald's Elliott wave analysis indicated, Bitcoin prices have bottomed out and are, quote, poised for a move up in the coming week, end quote. Meanwhile, after gold markets took their reins last week, McDonald's research reveals and tells us that the precious metals value is pretty much heading into a bearish period. So based on my analysis, according to McDonald, you should buy Bitcoin and sell gold in the coming week, as the report emphasizes. We're going to move on. There's a lot of news to cover. And so the one thing I really want to talk about is Global Blockchain Business Council and SurveyMonkey teamed up to find out American attitudes toward the world's most popular cryptocurrency, Bitcoin. Awareness of the decentralized currency is way up according to the survey, but those who actually own the digital asset still remains pretty low. During the second week of this year, 5,761 adults were polled about their attitudes towards Bitcoin. Now, they found that by 2018, Bitcoin awareness had jumped up by more than 2 times the number since 2013. But even though the brand recognition is growing, actual participation, still low. Only a fraction actually have Bitcoin. I bet you're probably wondering what that number is and what is the current holding, the amount of people holding that asset. According to their survey, only 5% hold it. So guys, what that tells me is if only 5% of people are holding the asset, right? And of those, a third of the holders use it to avoid government regulation, whereas 28% see it as a store of value, and mostly 63% see it as a growth investment. This tells me that as more people get invested into Bitcoin and cryptocurrencies, we are going to see a rise in price. And that is something that is very, very critical for me as an investor. Okay, in more news, we see that the SEC is really clamping down on shady companies who are trying to jump on the blockchain bandwagon. The major concern is startups that have no working product. If you guys have listened to me before and in the past, I am huge on this, especially when I invest. I don't invest on hype. I invest on if there is a product or a prototype available. Now, the SEC is cracking down especially on those that are looking to raise millions, or traditional companies rebranding themselves as blockchain connoisseurs, who are probably doing this to increase their stock value. And that is who the SEC is going to come down upon. And if you don't know who the SEC is, that's the U.S. Securities and Exchange Commission. So the SEC chairman, Jay Clayton, made it really clear that blockchain squatting, as he called it, wouldn't be tolerated by the government. Okay, now to the meat of it all. Coinbase, the largest exchange in America. And we know that in 2017 was an explosive year for all crypto exchanges. So, with the huge influx of new customers trading crypto, guess what? Came additions to staff, new trading pairs, and obviously, more revenue. We all wonder how much, right? Well, Recode reported that the company's revenue was above $1 billion, most of which came from the trading fees it charges. Now, if you want to know what that comes to daily, it's an insane $2.74 million. Yeah, daily, $2.74 million. And what does that narrow it down to in minutes? These guys are making $2,000 a minute. Yeah, I pretty much fell out of my seat when I read that. And guys, I'm definitely in the wrong profession after seeing these numbers. So since we're on the Coinbase topic, let's talk about GDAX. If you didn't know, GDAX is a crypto exchange run by Coinbase. But more importantly, it is that it has just partnered up with trading software provider Trading Technologies. The CEO of Trading Tech announced efforts to develop an asset class specific functioning to the TT platform or crypto trading. He went on to say basically that the decision to partner with Coinbase was because of the growing demand of the trading community. I don't know if this is good or bad. What I do know is it's something that I'm going to keep a close watch on and close eye on. And as far as that's concerned, let's move on to the crypto news itself, like actual cryptocurrency, Ethereum. Ethereum is getting closer to deploying a new technology that would basically allow the network to scale. Now, this news comes directly from Vitalik Buterin, and he also stated that in a developer meeting that part one of phase one is getting to the point of completion already. Now, why does that concern us or you guys? Well, Ethereum has been under pressure to keep up with the demand, especially due to rising popularity and, as we know, crypto kitties and now crypto celebrities, and the increased use of the Ethereum platform has led to the slower transaction times and higher processing fees. The congestion has already given rise to some other token-based projects like Stellar and whatnot. What I gathered from my research and reading is that there are 4 stages in the scaling proposal that should be completed in about a little over a month. Now this, along with the Casper protocol that was released earlier, should solve these scaling issues. But honestly, I don't mind the growing pains, because if we don't come up against these issues now, we won't be forced, or I say we like we're doing the developing, but we as the community, if we don't face these issues now, the Ethereum developers won't be forced to evolve that technology, right? And I'm hoping that Ethereum and the Ethereum dev team can basically solve this issue and maybe face another one in the near future that'll continue to push them forward and continue to, I guess, grow and help Ethereum evolve as a platform. So as we talk about Ethereum struggling, last week we were talking about miners who were being lured to Canada with cheap hydropower. Well, miners took up that offer. And it seems that Canada is struggling to meet their electricity demands. So Hydro-Quebec won't be able to power all the mining firms. And Bitcoin mining, it actually requires a large amount of electricity. The reason for that is because the mining hardware processes these huge, complex math puzzles or equations in order to validate transactions. And Bitcoin miners search for places with specific characteristics, and one of those is cheap electricity. And not only that, but low temperatures. So at the moment, China, Canada, Switzerland, and Russia offer relatively cheap electricity and have cold climates. It's also important to mention that the climate that they're looking for is because the ASIC hardware does its job, and while it's doing its job in calculations, it builds and generates a lot of heat, and so it requires low temperatures to keep it at optimal levels. So time will tell, and we'll be keeping an eye. We'll see what Canada does, how it alters energy consumption and pricing, and how Hydro-Quebec goes forward to keep the miners in Canada. All this is going on while Canada is basically attempting to adopt blockchain technology in its government. Now, Canada is going to try using blockchain technology to record government grants and funding, which they feel and believe will improve transparency. The trial is supposedly supposed to be conducted by Canadian NRC, which is the National Research Council. And they'll be using an Ethereum-based blockchain known as Katina, which was developed by BitAccess. This is all good news to me, and it should be for you guys as well who are invested in Ethereum, even though I'm not in Canada, because if it's built on the Ethereum platform, my Ethereum investment will be increasing in the future. Not only that, but if this is successful, along the lines of, government using it as an application, and with all the other states that are trying to implement blockchain technology in the United States, and pretty much everywhere else in the country, we're going to start to see a mainstream adoption of blockchain technology. Now, that's good for our wallet, and more so, it's great for the technology, and that tells me that the technology is here to stay. Guys, while Canada is testing blockchain with some US states, the one state that sticks out this week is Wyoming. Now, lawmakers in Wyoming have filed a bill that, if it's approved, would exempt some creators and sellers of Bitcoin tokens or blockchain tokens from securities regulations. On top of that, the Wyoming bill also lays out an exemption for being classified as a broker-dealer in relation to the token. The good thing is the bill excludes big banks and other financial institutions like credit unions and savings and loan associations. Personally, I really don't think that they need any more help. And since we're talking about states, we might as well talk about Vermont. Proppy, which is a Palo Alto-based global blockchain real estate marketplace, just announced that they were launching a pilot program in South Burlington, Vermont. Now, the program would use blockchain technology to record real estate documentation. I have to give it to Vermont. They've been in the news almost every week trying to do something with blockchain technology. And I'm going to have to say that between Illinois and Vermont, it's neck and neck, guys, as to which one is the most blockchain friendliest state. I hope this thing keeps going, and I hope more states join on to this. So let's talk about the tech. Blockchain protocol. Well, the protocol that Proppy will facilitate is trying to tie in titles to properties securely and efficiently. Now, they will also match buyers with sellers and brokers while offering information on neighborhoods with neighborhoods of where their properties are located through this blockchain. All right, we have to talk about this, BitConnect. This Wednesday, BitConnect investors filed a class action lawsuit. The suit states that BitConnect issued crypto tokens that were unregistered securities and collected additional funds through a Ponzi scheme. Guys, I really don't get this. Honestly, a lot of crypto investors moan and cry. They bitch and moan about government regulations. But as soon as they get quick, rich investment, like their little scheme goes belly up, they want government to step in. You guys, you can't have it both ways. You can't ask for freedom from regulations one minute and then call for the government to step in when you got screwed. Here's an idea. Do your research. And honestly, stop trying to get rich quick. This is to all the people. I know you guys that are listening to this podcast that are part of the CCG family are much too smart to do this. But this is for those guys that are trying to do this get rich quick thing. Haven't you already learned? It's never beneficial. But guys, on a more serious note, if I really think about regulations, I think as the government regulates the cryptoverse and the cryptocurrency arena, what we will see is an acceptance to cryptocurrencies. Once this happens, banks will also fall in line. So in the long run, I'm okay with regulation. I think it's good. I welcome it. We just have to be a little careful that it's not over-regulation. With that, let's talk about Robinhood. No, I'm not talking about Robin Hood as in the movie or the character, but if you didn't know, Robinhood is an investing app that can be installed onto mobile phones, iOS and Android alike. This app has been amazing in getting the average consumer, average person invested into the stock market with ease. So yesterday, Robinhood announced that they will be starting a no-cost trading app, which will allow users to trade Bitcoin and Ethereum without fees. So they're projecting this is going to start in February of this year. And I think this is great. Why? Because, you know what? It pushes some competition towards Coinbase. And Coinbase is a company that, guys, remember, they're making $2,000 an hour, right? So Coinbase normally charges fees which range from 0.1% all the way up to 4% per transaction. And you know what I say, competition is always healthy. What it'll do is it will force Coinbase to rethink its fee model, meaning we as the consumer may see it lowering its fees. If not, guess what? There's another option now. So Robinhood is currently only allowing users to track currencies at the moment, but it won't. Personally, I wouldn't be surprised to see them opening up trading not only to Bitcoin and Ethereum, but to other altcoins as well, especially considering the income that they'll see with these crypto trades. Bigger yet is it will allow more people to easily access cryptocurrencies. Guys, it's all about access, right? That means more volume, and more volume equals higher market cap, and for the most of you, an increase in your ROI, return on investment. So since we're talking about ROI and investments, I don't know if this guy is just if he's a genius, a money genius, or what. Um, it could be someone else who made this decision, but Curtis Jackson, you guys know him, or people may know him as 50 Cent. That's right. Was the first rapper to basically start accepting Bitcoin as payments for his fifth album in 2014. The cost of the album was $5.50 a copy, which at that time was pretty much equivalent to 0.0088 Bitcoin. The sale made him, get this, 700 Bitcoin, which were worth about $400,000 then. Fiddy recently reported that he kept all of his Bitcoin. Again, maybe he didn't realize he had them. Maybe someone in his management team kept them. But whatever the case, the hodling paid off big time. The 700 Bitcoin is now worth $7.7 million at the $11,000 rate per Bitcoin that we see today. All I have to say is good on ya. And geez, well done, Fiddy. Also, you want to share that wealth with me? Yeah, probably not. And guys, Stripe. The mobile payment processor announced that it is officially winding down its Bitcoin integration due to time and speed of its transfers. They aren't ruling out using Bitcoin in the future if these issues are solved, especially with the Lightning Network that is currently in the test phases, nor are they against using another cryptocurrency in place of it. But for now, over the next 3 months, Stripe customers will be encouraged to pretty much migrate away from the Bitcoin payments. Let's hope that they pick up another crypto in its place. And man, that crypto ARC is really starting to look more and more useful the more we think about it. Guys, if you haven't had a chance, check out our video in the free section. We have a video on ARC, the altcoin. And then if you're not a member, join the member section. We have a detailed breakdown of the white paper of ARC as well. Anyways, closing it off with this week, Weiss ratings. That was pretty much put out this week. Interestingly, Bitcoin and a lot of the other cryptos that we hold as the top cream of the crop only received a C+. Going through the list, I didn't see any cryptos receiving an A rating or even a B, to be honest. Now, I'm taking this list with a grain of salt, as the metrics that are being used to evaluate cryptocurrencies is based on what they use to rate ETFs, stocks, and mutual funds, and the likes of that. So, you and I know that crypto is a whole different beast, and we also don't know how biased Weiss ratings is. So again, take this with a grain of salt. If you want to take a look at it, we'll post the link to the JPEGs or the PDFs, whichever we can find of the document, in the description below, especially since Weiss, basically what they did was they made it free for a couple of hours and then they posted it behind a paywall. So, yeah, that's it for this week, guys. We keep going over that 20-minute mark, but that's a lot of information. If you want to check out more info on ARC, like I said, we have an intro video up at cryptocoinguru.net and a detailed breakdown in the member section that we're going to be posting sometime this weekend. If you aren't a member already, join the CCG family. Or if you are a member and have friends and family that can benefit from the info, knowledge, ICO and altcoin analysis, as well as the technical analysis, please send them towards the site and help them become a member. Remember, it's not about helping people grow their riches. It's about helping people grow their wealth. It's not a get-rich-quick scheme. It's nothing like BitConnect or dumping a ton of money into altcoins that you don't understand in hopes that your ROI is going to be extremely big. That's not what it's about. We don't want to see our patrons and supporters get burned. We want you to invest wisely with the right info and knowledge. And basically, we want to empower you to make calculated and educated investments. The more you grow, the more we all grow. So, join the CCG family, or if you're already a member, help someone join if you are, and help them grow their wealth. Guys, with that, we're going to close out episode 4 of This Week in Crypto. And we hope this information helps you in your investing. Other than that, happy investing. Crypto on. This is CCG signing out.